fascinating to have you with us, Rebecca, as to why maybe fintech isn't the first and foremost place you'll be putting AI to work.
Yeah, I think there are a lot of interesting places to put AI to work. Fintech is not the absolute top of my list. I think companies that have true transformative capabilities using AI are really where I'd focus first. And I can give an example in my portfolio with a company called Casetext. So Casetext is in the legal world. They help lawyers really put together legal research, write their briefs, do discovery. And the technology of AI, especially GPT-4, has supercharged that company and really transformed it and taken it to the next level.
So I think comfortable are potential customers with the offering from Casetext? For example, we saw the news and some smirked somewhat that 2 New York lawyers are potentially facing, well, some not only backlash but penalties because they used ChatGPT-4 to be able to put forward case studies that actually didn't exist. It hallucinated them. And I'm wondering it seems funny, but this has real connotations when people need to start saying that they're using AI within this work, right?
Oh, 100%. So I will tell you, people have been so comfortable with Casetext that the company racked up $5 million of additional ARR in 45 days after the launch of their product called CoCounsel. And regarding that story, what has to happen, even if I'm an attorney as well, actually. And so if you're an attorney, you need to read the work, whether that be of your associate or of your AI. And what's happening is that Casetext is effectively standing in the shoes of an associate. And so as a partner at a firm, you would be required, of course, to review that work. And I can pretty much guarantee you they weren't using Casetext.
And basically, that's kind of what you've got to do right now. You've got to sort the wheat from the chaff. What's real, what's not, what's hype, what's reality. And ultimately, how are you doing that when you're looking at, I'm sure, hundreds of messages pouring into your inbox, trying to sell you the AI vision that they've suddenly bolted onto their company?
Yeah, it's funny. I tell everyone my inbox is more like a Twitter stream at this point in time, right? So there's a lot of sorting, I will tell you, but there's always a lot of sorting for us. And quite frankly, that's what we're paid to do in venture, is to really sort of see around the corner and really start with what's next. Like, what is it that this world needs? What is it that is really going to be happening, in the next 10, 15, 20 years? And then work backwards. And so, just sorting through what comes in email is very reactionary. And, I was taught very early by probably one of the most respected people in venture, Bill Gurley, that the best deals are really the outbound deals. So our firm and our thesis is really outbound, macro, and then you work backwards from there. So what's early, what's transformative? And just tagging AI to something, it doesn't really help. I think AI will be helpful in almost every business. And we really want to see, not what's just helpful, but what's transformative, right? What's really going to create the next, $1 billion, $10 billion, $1 trillion company out there.
What are valuations like when you're looking at those outbound opportunities?
Yeah, so valuations, we invest in the Series A and B. Our real core asset in our firm is our go-to-market capability. And so what we like to do is come in and invest when companies are Series A or B. And what we like to do is sort of do the late A, early B. So really before somebody is, technically fundraising, go in, come in a little preemptively and help them get to that next level. When you talk about valuations, valuations across the board are down. They're down less for the Series A than they are for growth stage. Growth stage valuations have just taken a nosedive. They're down 80%, I would say, right now. Early stage valuations are down 40 on the average. However, there is the case of the have and the have-nots. I have one company in particular that was not even in a process and now is sitting on 4 term sheets, right? And so it really is this case of a have and a have-not.
When you're looking at the later stage with valuations on the downside, they're having to buckle up. They're going to have to ride out the next couple of years as the economy recovers, as people get risk appetite once again. And they're also having to maybe pivot or indeed ensure that they're not having their lunch eaten by other new AI players on the scene. How are you making sure your portfolio is robust for this complete change in vanguard moment, as many want to call it, in the world of artificial intelligence?
Yeah, I mean, this is a moment that we haven't really seen since really when the walled garden came down with the introduction of the iPhone. That happened, about 15 years ago when I first came into venture. And I think our firm is unique in that we have seen multiple cycles. This isn't our first rodeo, right? And so we've been through this before. And in every cycle like this, the advice is the same. It's cut your burn, cut your burn and cut your burn. Plan to get there on your own oxygen. And don't be afraid to pivot. I mean, there are, in the land of AI, there are huge opportunities in front of companies. Take a beat, cut your burn, and live to fight the next fight, and take advantage of what the capabilities of AI can offer you to really rethink your company and think out of the box and get there. And the problem a lot of these companies have is they're sitting at such a high valuation on their post of their last round that they have to get profitable because they're not going to be able to get that next round without a big down round or even a recap.